I've been trading with trend lines for more than 14 years, and today I've put everything that I know into a trend line trading course for you here on YouTube. And I've divided this into two parts. In the first part, I will show you exactly how to draw the trend lines, how to find the best trend lines, and I've put together a lot of practical tips that you can use to improve your trend line game. And in the second part, I'm going to introduce a few trend line strategies. I will show you how to find the best trades, how to actually get into trades, what are the best entries, and we're going to learn how to do a proper multi-time frame top-down approach for finding the best trades and improving your trading strategies using trend lines. Let's get started with part one, and we are going to talk about how to draw trend lines. And I want to spend more time on part two when we actually talk about the trend line strategies and how to find trades. But it is very important that we know how to draw a trend line. So let's get into it. And the most important two concepts and 2 points are, for a trend line, you obviously need to have a trend. The name trend line should have given it away, but many traders make the mistake that they don't use trend lines only in trending markets, and that's going to cause a lot of problems. And second, we need to have swing points, because swing points are the points where we actually draw our trend line. So when we are looking at a potential uptrend, so when the market is going higher or starting to go higher, what we are doing is we are connecting the swing lows. And the swing lows are the lowest points in an uptrending market, and they are our anchor points for our trend lines. And this is how we then gonna start drawing our trend lines. And what you will see is that when the trend progresses and as the trend keeps going, we will get more swing points. And therefore, we will be able to start drawing more trend lines. So this is giving us a few options. However, what we have right now are two potential trend lines. And the problem here is that each trend line only has 2 swing points or only 2 touch points. And because a trend line is a diagonal line, we could connect any 2 random price points. This is always possible. So we would have infinite ways on how to draw a trend line. But for a valid trend line, you always need 3 touch points. This is one of the most important concepts, and this is something that needs to really be clear. A trend line is only a trend line if you have 3 touch points. And what traders are doing, and I will show you in part 2 how to actually get into the trades, but the basic idea is that obviously a trend line is describing a trend, and what you want to do is you wait for the price to get back to the trend line. So now you can see here the market is coming back to the trend line for the 3rd time, and now we are potentially looking at a validation of the trend line. And the biggest problem that many traders make is that they are obviously very impatient. And many traders, they just need to be in the trade. They are always suffering from FOMO, the fear of missing out, and they're jumping into trades too early. And many traders trade those trend lines blindly. They don't wait for confirmation. They see a trend line may be hit for the 3rd time, and then they jump right away into it. And I will show you later of how to actually go to the lower time frame and how to find the perfect entry using a trend line. And I've provided a lot of tips, and I've been trading trend lines, as I've said, for 14 years. So I have created a lot of strategies, and I've taken hundreds of trades using trend lines. So this is going to be really special. And as a trend progresses and as you see different ways on how to actually look for the trend line touch points, we will be able to find different concepts on how to actually trade with the trend. And there are many great trading strategies, trading tools that we can layer on top of our trend line. So we're going to drop to a lower time frame later to actually see how we can use trend structure, how we can use market structure. I will keep this video 100% price action. So everything that you will see during this video and how to use a trend line strategy is only going to be price action related. And a very important concept is also that what you will often see is that when a trend line has been hit 5, 6, 7 times, we say that a trend line is maturing. And a very popular saying that is also applicable to technical analysis is often, when something seems too good to be true, it usually is. And what you will see is that when a trend line becomes so obvious after it has been hit 5, 6, 7 times, a trend line gets weaker and weaker and weaker. And what you will often see is that as a trend line is becoming so obvious, and many traders are paying attention to it, everywhere you can suddenly see that a trend line is popping up. Many traders talk about it. The trend line is often starting to weaken. The trend has progressed already for quite a long time. Many traders who have traded earlier the trend line are suddenly getting out of their trades, realizing their profits. And a lot of traders are also trying to look for breakouts. And I've also included a few very interesting trend line breakout strategies. And they're really, really exciting strategies because a trend line breakout can often be a sign that a trend is turning from an uptrend to a downtrend. And those turning points are the perfect places to look for trades because there is where you have the biggest profit potential. A new trend may be just starting out, so it really pays off to learn as well about trendline breakouts. A very important point before we move on to the strategies is also that you want to never cut through a body. This is also a good lesson for real life, but in trading, we never want to cut through a candlestick body. We want to make sure that a trend line is not violating any candlestick bodies. It may be okay to cut through a wick. In my own trading, I allow a trend line to cut through a candlestick wick for a few points, for a few pips, but I will never allow it to cut through a body. If I have to cut through a candlestick body to create a trend line, then I will not use it. So before we move on to the strategies, here are the four most important principles when it comes to drawing trend lines. First, 3 touch points are needed for a valid trend line. Second, you need to look for trend lines in a trending market, not in a range market. You never want to cut through a body. And after 5-6 touch points, a trend line may weaken and it can start paying off to look for reversals and to look for trend line breakouts. And that is what we're going to do now. We're going to start with trend line trend following strategies, and then we will move on to different types of strategies in part 2, which we're going to start now. However, I want to point your attention to a huge special that we are currently running. So I've been trading for 14 years. I have compiled now a very big trading course special. So you'll get 4 trading courses for the price of 1. And this includes my actual trading strategies. I've included dozens and dozens of trade studies, step-by-step explanation of how to find trades. I have included rules for entries, for stops, for take profit, for managing trades. You will get my core strategy, and I've also included 3 bonus courses: how to trade supply and demand, a multi-time frame trend following approach, and if you're new to trading, also a Forex starter course. And if you want to get even more, then we also offer a Forex mentoring group. And in the Forex mentoring group, you also get access to all of our trading courses, but you will also get access to our chat room, where we have a group of like-minded traders, a great community who's eager to learn and to become better. We also host 5 to 6 live webinars every single week. We talk about the Forex markets, what is happening right now, what are the best trading opportunities, but we also help our traders to grow. We review your trades if you are a member. So once you're part, there is a channel where you can send your trades in, and we're going to provide personalized feedback and help you grow over time. And the links to all of that and even more information you will find either in the video description below this video or also in the comment section. I pinned the first comment with a lot of information. So if you want to learn more about both specials, make sure to scroll down and check it out. So let's get into part 2, and everybody has been waiting for it. We're going to talk about trendline trading strategies and how to find the best trades. And what we want to do is, when we are able to find a trending market, we start connecting the swing highs. If the market is in a downtrend, we want to connect the swing highs, because we want to wait for the market to get back to the trend line. And then we're going to start looking for trades. What are you not going to do when the price is hitting the trend line for the 3rd time? You're not going to automatically jump into a trade, hopefully. This is not going to work out. And what you want to make sure is that we are looking for more confirmation. And this is a trendline pullback strategy. And this is one of the best ways on how to find trend following trades. Why is that? Because when the market is in a downtrend, and if you want to go short, where is the best way to short a downtrending market? The best price to short in a downtrend is at the highest possible price. And the highest possible price are the top of our correction wave. And this is exactly what a trendline pullback strategy is trying to do. It is trying to help us identify the highest points of the correction waves with where the trend line is touching the price action, and then we're going with the overall trend. So this is the trend line on the higher time frame. We have 2 touch points and we're looking at a potentially third confirmed one. You will see we have a previous support maybe turning into resistance, and now we're gonna start dropping to the lower time frame. Now we're on the 1 hour, whereas previously we were looking at the 4 hour. And on the lower time frames, you also want to look for trend structure. And you want to look for where are swing highs, where are swing lows, where do you see breakout points. And here it is very clear and very obvious. Here we are hitting the higher trend line, and also how is the market hitting the higher trend line? You will see the market is stuck in this range. We have our lowest point here, previous resistance here on the high is turning now into support. So the market is really stuck here in this tight little space. And the way to find a trend following entry is to wait for the market to break out of the pattern, and the breakout pattern is then confirming our trend following entry. Many traders are going to jump on it with a pending order. Some traders prefer a limit order or a market order. So you wait for the confirmed close and the confirmed breakout. I will also show you later how to actually trade a retest approach, which is very common in the markets as well. But the general idea is you want to look for a pattern on the lower time frame, some kind of consolidation, and then on the breakout you will trade with the trend. And this is what happens. You can see this was our pattern. The market broke out and violently moved lower. And the way you want to look for targets is usually when you look to the left-hand side, you want to look for the most important swing lows and swing highs. They are often used for target placement. So if you want to go short, look left and see where has the market previously turned. So here we had the last swing low. That could have been a very nice target here as well for this example. Here we have now a higher time frame uptrend, so the market is moving higher. We have higher highs and higher lows, and in an uptrend we connect the swing lows. Because if we want to trade long, the best price to trade long is at the lowest possible price, and that is when the market is hitting our trend line. So you can see we have one touch point here, we have the second here. Here's where we are confirming the trend line. We have a very nice triangle, which is a great signal that I will talk about later. And we want to look at now at the fourth touch point, and we want to analyze how does it look on the lower time frames. And this is how it looks on the lower time frames. This is the previous triangle, which looks really great. And here we can see the fourth touch point. Again, we can see the market traded into the trend line and didn't immediately show a reaction. This is why I said so many times, and why I keep saying it, we never want to trade a trend line blindly, because not always will it work. Sometimes the market will just be trading around a trend line for a long time, and you don't want to be stuck in such a trade where nothing happens. You want to look for a momentum trigger, and a momentum breakout, a momentum trigger happens when the market is breaking out of patterns. And here we're very, very nicely able to confirm an inverse head and shoulder. When we zoom in a little bit deeper, you can see now we can clearly see the inverse head and shoulder, the left shoulder, the head, the right shoulder. We are also able to draw a short-term trend line here on the swing lows. So we can really nicely go to microstructure. We started on the highest time frame, the 4-hour higher time frame, to just get a general idea of where's the trend heading, where's the big trend line. And then we drop to a lower time frame. Now we are all the way on the 5-minute. And what we are doing now is we're waiting for the market to break out of the pattern to give us the confirmed momentum signal. And this is how it looked afterwards. You can see the market had this inverse head and shoulder. We had a confirmed breakout here. And first the market moved into the previous resistance, had a little bit of a struggle, which is very normal. It still kept making higher lows, which is good. And then it really took off. And everything started here with the momentum breakout. So you can see entering at the trend line here would have just resulted in a long, long period of nothing is going to happen. This is going to be very challenging emotionally to just hold on to the trade. But the real good entry would have been here on the actual breakout out of the pattern. So really, really nice example. This is how it looked on the higher time frame after the fact. We have here our confirmed trend line. The fourth touch point happened here. And you can see the trend continued higher later on. Another example on the higher time frame, we are here on the 1 hour. We have a great trend line, first touch point, second touch point, and here we're looking at a potentially third touch point. So when the market is hitting the trend line for the third point, what I will do is I start dropping to the lower time frame. I will start looking for support resistance, microstructures. Here you can see we have a previous support, level that held previously. It was resistance here. So it seems to make a lot of sense to look for a trend line at this point. And when we drop now to the 15-minute, again, we are able to look for support and resistance. You can see here we have lower time frame support turned into lower time frame resistance on the way down. And whenever we are able to really put our price into such a box, when we're able to define a potential breakout level, then this is where you can start looking for trades. And it's very simple. What you want to do is you want to wait for a confirmed breakout, wait for the market to break out of such a pattern like it did here, a full candle close above it. And that can often be a signal. Some traders prefer also to wait for a confirmed break, a retest, which is not always happening, but sometimes. I will show you that in a later part when we talk about a trendline pullback strategy. And you can see what happens first is the market hits some resistance here at the previous level. So support turns resistance, turned resistance again. Still the market made higher lows, so that is good. It's a confirmation that there may be more bullish sentiment building up. As long as the market is not breaking into a new low, we are good here. Potential targets, you could look left again, look for big swing highs and lows and use that for your target placement. And you can see afterwards that's what happened. You can see the market eventually broke this level here, continued the trend structure higher, kept making higher lows here as well. And then eventually it hit the previous resistance level. There's also a huge supply area in here. If you want to learn more about that, check my other videos around supply. And this is how you could then create a target approach. So very nice how we find a higher time frame trend line, we find the higher time frame trend direction, then we drop to the lower time frame, look for patterns, look for breakouts, and then we could style and manage our trades on the lower time frame. Another very important concept is we want to look at a trend line angle, and we want to understand how is a trend line angle changing over time. So you can see here in the beginning, the market had a very steep trend line. In a short period of time, the market really rose significantly higher. But then what happens afterwards is the trend line angle completely changed. From a very steep trending market, we went to almost sideways. There's only a little bit of an increase here in the trend line. And this already shows us that clearly something significant is changing here in the market and the trend dynamics. We go from very strong uptrend to almost no uptrend at all. And this is a huge and a big heads up that the previous uptrend may be over and it's time to look for breakouts. And those can be great opportunities to look for trendline breakouts. And I've provided a lot of trendline breakout strategies now and a few very important and interesting trade studies that we will get into now. All right, so let's talk about trendline breakouts, and I love trading trendline breakouts because they provide you such a great entry price, as we will see. And we want to look for a trendline breakout with a lot of context because we are trading trendline breakouts as trend reversals into a new trend. And what you want to see as a trend context is, for example, previous key levels, a loss of momentum, local structures. So how does it look? First of all, when we zoom out, you can see here's a previous resistance. This resistance led to a strong sell-off in the past. So clearly a very significant level here. And you can see the market is struggling. So we have our previous key level. We also have the component of loss of momentum. Whereas previously the market was always able to make higher highs very easily. Here the market is struggling. We are not able to make higher highs. Here we are even starting to make lower highs. This is very important. At this point, the market still is making higher lows. So we have technically not completely broken the trend structure, but we are not able to break into new highs. We are also able to define a local structure. So we have our trend line here, 1, 2, 3, 4, 5 touch points. Great. We're looking at a confirmed valid trend line. And we're looking for a last swing low. So here's the last swing low. And what happens is that when the market breaks this level, like it did here, what are we looking at now? Now we're looking at a market where we are making lower highs and the breakout confirms that we are making now a lower low. And this is exactly how downtrending markets evolve, lower lows and lower highs. So this is a very important change in the trend structure. This is the first time in this whole uptrend that the market is able to make a lower low. And on a trendline breakout, what we generally want to do is not only wait for the trend line to be broken, but also wait for the market to break the last swing low. Because as I've shown you, now we are really looking at a complete trend line change and a trend change. And now what we're doing is we drop to a lower time frame to time our trades. And on the lower time frame, what we want to do is we want to look for a pullback. Pullbacks are very common, and especially trend reversal pullbacks. So this is our previous support from the higher time frame, the last swing low that has been broken. And what you will often see is that the market is coming back into such a structure, and previous support is often becoming resistance. And this is a very important feature. Many traders have problems with stop loss. Many traders have problems with break-even stops. When they're in a breakout, they immediately move their stop loss to break even, and then they're being taken out by those pullbacks. So it's very important that you understand that pullbacks are very common, and you need to account for that also in your stop loss trailing approach. Give your trade some time to evolve. Don't suffocate your trade with a too tight of a stop loss approach. And what you'll often see is that when the market is hitting the previous support as resistance, then you will often see here the continuation to the downside. And you will see that now we have this nice trending structure to the downside. Market is moving in those waves to the downside, lower lows and lower highs. And this is exactly how we're going to use our trendline breakouts and the pullbacks. The best price to short in a downtrending market is at the highest possible price. So when we are looking for a pullback entry, this is the highest point in the downtrending wave. So you can see the market is now making lower lows and lower highs, and we want to enter close to the previous pullback area. So this is the pullback, and this is exactly where we find the best trading opportunities. Still, the downtrending structure is not broken. The market is making lower lows and lower highs, and we are entering at the top of such a trend line wave. So the perfect way to get into a trade, a trend following trade, are those pullbacks, are at those confirmation points. So now we have learned about trendline pullbacks, we have learned about trendline breakouts, and now I want to spend some time on trendline patterns, because trend lines are often used to define patterns, and there are many great ways on how to actually trade patterns. So first of all, the first tip is that we always want to make sure we are able to identify the long-term trend. We want to zoom out of our charts, and we want to identify, are we in an uptrend, are we in a downtrend, because this is determining, are we looking for buying opportunities or selling opportunities. So what we can do is, for example, use the daily moving average. So we are here on the 1 hour chart, but the blue line is the daily moving average. And I showed you in my last video with the moving average tips on actually how to get the daily moving average on your lower time frames. Make sure to check that out in my channel. And what we are seeing here is the market is trading below the moving average, and it is very strong downtrending. And what we want to do in a downtrending market is we want to look for trend continuations, which means is we want to look for shorting opportunities. And again, I really want to highlight why this is so important. When we are in a downtrending market, those flags, this is what we call a flag, those are our correction waves. This is our flag. This is our flag. This is where we look for flags. And flags may trade back into a trend line, but what we have is also that flags are defined by a trend line. So we are able to use a trend line now to time a breakout trade into the trend direction. So this is our trend line that we're using to define our flag. So after a strong downtrending move, the market is temporarily pausing. And as I have shown you so many times, the market is never in one straight line moving lower. It's always in those back and forth. And we don't want to enter in the middle of such a strong move, because the longer such a strong trending market is going on, the higher the likelihood that a pullback is happening. So we are much better off waiting for the pullback and then getting into the trade here on the turn of the breakout or of the correction wave. So this is what the flag and the trend line is helping us to do. After the strong trend, we just wait it out. When is our first correction wave coming? Then are we able to find a trend line? Yes. We're also able to find the last swing low. And then we are just waiting for the market to break out. We could wait for a breakout, we could wait for a pullback, and then this is what had happened afterwards. So flags are great because flags connect the trends. So a flag is the correction waves, and a flag connects the downtrending legs in a downtrend. Here we are in a long-term uptrend. The market is coming from a downtrend. It topped out, we bottomed out rather. We have a double bottom. The market started to make higher lows. We're able to use a trend line here on the top and on the bottom to define it as a triangle. And triangles are trend continuations as well, just like flags. And again, what we want to do is we wait for the market to break out of the trend line, and we also want to make sure the market is breaking the last significant swing high. And you can see we have a breakout, we have a retest as well, and we have a later retest here once again. That's why I keep saying in so many of my videos that if you're using a stop loss trailing approach and if you're using a break-even stop loss, give your trade some time, because those retests are just so common. And I've been trading breakouts and retests for 10 years, way more than 10 years, and pullbacks and retests are becoming more and more frequent. So really make sure that you account for that in your stop loss trading. There can be great opportunities here as well to time your retest on the lower time frames. And then when do you put your stop loss, or where do you look for targets, is at previous key levels, for example. You could also use a stop loss trailing approach. You could use, for example, a Fibonacci for your targets. There are many options. A very objective way is obviously just using previous support and resistance key levels. So now let's make a little bit of a cut actually. And when we look at a trend line, there are different components obviously. So previously when we talked about the trend line breakout, we want to look for a trend line that is changing the angle, where the market is going from strong uptrend to weaker uptrend. And now we want to look for exactly the opposite. Now we want to look for a market that goes from a trending market to a much stronger trending market. And in trading, we call this the bump and run pattern. So what you will see is that the market is in a trending phase. We have a great trend line that we could use here for trend line pullbacks, retests, and then suddenly the market is really pulling away from the trend line. And this is what we call the bump. And what you will often see is that this bump suddenly is leading to such a strong trend that the trend becomes unsustainable. So when you see that the market is reaching such a huge level that it's just not sustainable long term, what you will often see is building divergences. For example, you'll see here, this is a triple tap that I talked about in my strategy videos in the past. And this is a price divergence. And this shows you that the momentum is losing. And this is what we are then calling the start of the run. So we have the bump, which is the first initial push. And then we have our run. The run is then where the market is about to collapse and trade into the opposite side, because this is just not sustainable, and this is just not how the market can keep going forever. So it's very interesting to look for those trend lines when the market suddenly takes really off vertically away from the trend line. Afterwards, when you see such a exhaustion pattern, a divergence, then often it can be very interesting to trade and to look for those reversals after the bump and run pattern. And that's it for the trendline course. I hope you got something out of it. I compiled the most important tips that I've put together in this trendline video. You can screenshot it, you can use it, print it out, hang it into your wall, and remind yourself on how to draw a trend line. So I hope you enjoyed the video. If you did, make sure to leave a comment below. Make sure to subscribe to the channel so that you get notified about my new videos that are dropping every week. And I want to thank you for the great support. I really appreciate it. I read all the comments, even if I can't reply to all. Thank you so much, and happy trading.